Good news, guys. FHA just lowered their mortgage insurance premium on their monthly mortgage insurance. So, what that means for you is 30 basis points less per $100,000 borrowed. So, in the old days, it was $850 for 100,000 borrowed. Now it's $550. What that means is on an average house in Utah, where I land, $300,000 to $400,000, you're going to save 90, sometimes $120 a month, which is amazing. That's a lot. That gives you almost $15,000 to $20,000 more purchasing power with FHA alone. The other good news is because they've lowered that, now credit scores up to 680 or 700. To be honest with you, may make more sense to look at FHA. Now, a couple things to keep in mind. FHA mortgage insurance is the same whether you're a 500 score or an 800 score. That does not deviate. Conventional mortgage insurance is based on your credit score. So your MI is going to be cheaper at 700 than 680. It's going to be cheaper at 720 than 700. So things to keep in mind as you're shopping. You always want to look at options, okay? A good solid lender will actually lay out multiple options for you to explain why one may be better than the other. Now, not going to lie, FHA appraisals are a little more strict. They're going to look at health and safety items. They're going to look at exposed electrical wiring. They're going to look at broken windows. They're going to look at peeling paint on the edge of the house. They're going to look at things that maybe you probably should look at anyway. So you want to consider FHA when you look at financing. Everyone seems to think it's a poor people loan or a first-time buyer loan. That is not accurate. In my county, the FHA limit goes all the way up to $650,000 or thereabouts, right? So there is plenty of options to buy a house with that financing if it makes sense. With the new lower MI, it actually makes a ton more sense. Now, great credit, conventional loan normally is going to be better. You're going to have cheaper MI, and obviously it goes away at a certain point in time, whereas FHA mortgage insurance stays in perpetuity. But the way the market's been the last 5 or 6 years, we're running through boom bust where it comes to rate cycles where they go up and down and up and down. The likelihood of being able to refinance in the next year is pretty accurate. So keep that in mind. But if you're shopping, don't let someone tell you need 20% down. Don't let someone tell you that FHA is an inferior loan. 3.5% down with a 580 credit score and above. Now, mind you, you still have to qualify credit-wise, have made payments on time and everything else. From 500 to 580, it's 10% down, but the MI or mortgage insurance does not change. So if you've got questions about mortgage insurance, if you've got questions about FHA loans and why they may benefit you to look at those, I implore you to reach out to me. I do all types of loans, whether they be conventional, VA, FHA, or USDA. I've done enough of all products to understand them well enough to guide you. Now, not every product fits every person. Don't let someone pigeonhole you into something that doesn't make sense, okay? Reach out to me, let's talk. Look forward to hearing from you.